Yo, what's going on, boys? Charlie here with another YouTube video, and in this video I'm going to go over a weekly recap here. I did not trade really much at all this month. Um, the last 30 days roughly, I've been on the charts here and there. I've taken 2 to 3 trades. I believe I hit 2 TPs. I lost 1 trade, and that's pretty much it. I'm in the process of doing a lot of stuff right now, and working on a couple other things right now that for the short term require kind of all of my energy. So I've not really been too active on the charts, especially this week. I did not trade this week at all, especially for the last 30 days, really. But what I want to go over is specifically gold and silver alone. In the kind of aggressive approach that I've been taking and trading recently, and go over the trades that happened this week, just to show you guys that there's trades and stuff like that, or maybe there wasn't any trades. I don't know. And I'm going to be going over everything, why I would skip them, why I would take them. And then I'm also going to go over the stocks and the AI build out, what we're kind of looking at, and what type of movement we got in the overall market this week. We had a really big rebound this week, really big bounce this week here. And yeah, I'm going to show you guys. So let's hop into it on gold here. I have 2 sessions. This is my New York session. Okay, so in New York time, it's 4:30 a.m. to 10 a.m. And then this is my Asia session, which is 6 p.m. to 9:30 p.m. Okay, so looking here on gold, Monday there was actually a trade. So one major thing we want to make sure is we aren't trading completely counter trend, right? Trend's not always going to be 100% clear on the 5-minute time frame, as we can see a lot of consolidatory movement, a lot of sideways movement. As long as it's not completely counter trend, in my opinion, it's fine, right? That is my opinion. Personally trading this as an aggressive model targeting 1 to 2s. This is something that I've been looking into recently very heavily. My community knows about it. I've published results and stuff like that in there. But for this YouTube sense, this is just something I've been doing recently. So for gold specifically, you do actually have a trade here. So for any of y'all that do not know my entry model, it's a supply and demand zone. So for example, this is a demand zone, and you want to see a level of liquidity in front of it. So this would be it's just a higher low, okay? And you want to see that higher low take out its own high right here, right? So price came up, took out its own high, and you want to see price retrace, take that level of liquidity, and you don't want to see the candles close inside of that demand zone or anything like that. You just want to see a wick in, and then from there, I teach a couple different entry models, and the most common one is going to be your first bullish candle close after we tap into that demand zone. So, for example, this is actually a trade right here. If you entered, you put that stop loss right under that lowest wick that tapped into that demand zone, and a simple 1 to 2 would have hit in here. So again, I've not been active this week, so I have no clue what even happened this week. But this is just one simple trade that I do see ended up actually playing out. Just a simple demand zone followed by a level of liquidity right here. That level of liquidity came down, took that level of liquidity. Nice reaction. If you would have entered there, 1 to 2 would have gotten hit. And again, I'm only looking at trades that's in my session. So that's really just very at the beginning of Asia session. Not much of a trend here, to be honest. Really just sideways movement, completely sideways movement. So, you could take this as a long or short position. In my opinion, it's just really totally up to you, as long as the liquidity is good. The liquidity looks fantastic, and the reaction looks very good here. So that's that. And for this entry model, I stay completely away from one candle liquidity. So what I mean by that is you guys can see the liquidity right here is 2 bearish candles. The liquidity right here, for example, is just one tiny little candle. This isn't really liquidity in my opinion. This is just a random bullish candle. There's no liquidity being held here. So right here, you would have got that reaction. This is a trade that is completely invalid for me. I would not take these trades. I stay away from the one candle liquidities. If you have taken this trade right here, you would have lost. It would not have hit in a 1 to 2. So that's a trade I would have skipped. So that is Monday. If we're looking at Asia session Tuesday, nothing. New York session Wednesday, nothing. And then this day, nothing. I have an alert right here. You turn off. This day, nothing until after session. And New York, again, this day we have a supply. This is a one candle liquidity I'm usually not looking at, although this trade did end up playing out. This is a very small structure trade. Mainly counter trend in my opinion, at least at this point in time, right? It's looking very major counter trend, one candle liquidity. This isn't a trade I would personally take. Very small structure, just a trade I would never personally take. But yeah, that's that. And that's pretty much it. So we had, one good trade at the beginning of the week on Asia session, Monday night. And that's pretty much it on gold. So let's check out silver real quick. Again, I have zero clue what to even expect. I did not actually really look at these much. If I did, I skimmed over them quickly. I can't remember exactly if I looked at silver. I don't think I did. So if we check out silver since the beginning of this week, we don't see anything up until this day right here. So this is another rule that you want to watch for. Is I personally don't like taking trades where, first of all, this trade is pretty counter trend in my opinion. And the main thing is I don't like to see trades that come up and take liquidity like this, run in opposing directions, and then finally come up. Because that is just not, it's not taking liquidity and reacting from your supply zone. It's just taking your liquidity, doing whatever it wants, and then finally coming up to your supply zone. So personally, I stick away from those trades. That is just another thing I watch for personally. So this trade right here, this trade, very counter trend. Again, the main thing you want to look for is trend. It's obviously pumping buys right now, at least in the 5-minute time frame. It's bullish, bro. Don't try to fight the trend. When you're fighting the trend, you're going to get a lot of unnecessary losses, in my opinion. And this is an example right here of a short position that you could have taken. Stop loss right there. It might have hit a really small risk reward. If you were aiming for like a 1-to-1, it would have hit. But 1-to-2s, 1-to-3s, 1-to-4s, none of them would have hit because it's counter trend, bro. You're fighting the trend. So these trades right here would be trades personally I would not take. I want to see something in trend. I want to see something bullish. And we do get a bullish trade right here. So Wednesday, we get a very nice bullish trade right here on silver. We get a very nice level of liquidity. And yeah, like I said, you can just see this one is way more in trend compared to these other ones. We're clearly trending up. That's just fighting the trend, bro. It's clearly pushing up, and you're just trying to pull it back down. It doesn't make too much sense. Same thing here, right? Whereas this demand right here looks a lot more in trend, in my opinion. So this would be a trade I would actually take personally. You would take this on a candle close. So if you took a long position, it would be right here. And if you put your stop loss right under that wick, I believe this would have just hit in a 1-to-2. Yep, it would have just hit in a 1-to-2 right there. And that would have been another winning trade, actually, both in the Asia session. So we had one on gold, one on silver, which is really nice to see. Again, unfortunately, I really have not even been on the markets that much for the last like 30 days. It's been pretty bad recently, but I'm going to be more active. And it's just very nice seeing these things play out. Just showing that the setups are just constantly forming. So this setup, for an example, this would be personally up to you. We're in a bullish trend, but as of recently, it has been sideways. So it kind of evaporates that whole bullish trend or counter trend narrative, right? So when you're trending like this, in my opinion, when you're trending really hard and you're openly taking supply zones, it's completely counter trend, bro. But when things are like more like this, when we are consolidating for a little while and we have nice liquidity and nice reactions, then it's not as bad in my opinion. A lot of trades still win like this, so this is personally up to you. Very big supply zone, very absolutely massive reaction. The candle barely closed bearish. Just to take a short position right there and put your stop loss above that wick, a 1-to-2, you're needing a whole way. You're needing price to come down and break this last low. In my opinion, a 1-to-2 does not make sense there, especially since you're looking for a big price movement down the whole way down to this bottom higher low, where you are overall in a bullish market, right? Yes, you're internally consolidating. And why I said that it's normally okay to take is because 1-to-2s are usually going to be quick reactions, something like that. So if we do end up continuing up, you can still a lot of times catch a 1 to 2 right there. But if a 1 to 2 is this massive movement the whole way down here, right, that's a lot more unlikely to happen. So personally, I'd probably be sticking away from that trade. But that's pretty much it. That's it. Kind of all we got last week. 2 trades, 2 simple trades. Both of them actually did hit TP. And yeah, I just kind of want to show you that more aggressive type of approach, especially trading morning and Asia session, and having just alerts on, so you're not essentially glued to the computer. You just have the computer nearby. You get an alert, and a trade validates. Enter the trade. Go back to what you're doing. So that's kind of the wave I've been shifting to. I just have to. I'm currently building other stuff right now to set myself up here in a little bit, and then I can dedicate a lot more time to the trading. So that is gold and silver specifically. And I may be switching to just kind of mainly focusing on these two and not as much as everything else. The JPY pair's just been constantly intervening, and they're going to for the rest of the year. That's what, and when you're trading, you are an entrepreneur, and an entrepreneur has to adapt to the changing environments that surround him. So yes, JPY pairs perform good, but if we're in a war right now with Iran and it's going back and forth, and Trump's going back and forth with Iran, and then we're probably going to invade Greenland after this, and then tariffs are still going to be a thing, JPY are nonstop going to be intervening all the time. So to try to stick to your bias just because it's profitable, but not realizing that the market environment has changed and you have to adapt, is stupid. You need to adapt. And adapting involves understanding that these pairs might not be the best to be trading right now. So I like gold and silver, lower risk to reward, a little bit more aggressive approach. So I will be kind of looking into that more as we go on. But if we take a look at the stocks, what happened this week? Massive rebound for Microsoft. Absolutely massive rebound for Microsoft. Insane. I think at the beginning of the week, Thursday, actually, end of the week last week, massive rally on Microsoft. Earnings came out absolutely amazing. Microsoft's been ripping. I currently have this at an entry price of $393. It's almost at $500 right now a share. Microsoft's been absolutely ripping. But Google, on the other hand, not bad either, but their earnings came out green, but they also announced they're spending a lot more money. So what that did is that just dumped the price down, 8% off market open. But that isn't a bad buying opportunity either, because that just dumps down the price, makes it very cheap. And Google isn't a company that, just because they're spending more on AI, that means, that's it for Google, it's just going down. That makes no logical sense at all. All of this is just short-term news. So, it rebounded pretty heavy, 18%. Pretty safe rebound here on a very good company like Google. Meta, I think we've been just kind of hanging around. Meta kind of missed earnings there. They've been just hanging around sideways. Amazon actually putting in new highs. They don't have that much money spent on AI. That is why this company is going to be the one doing the rallying. Earnings are great, so of course we rally super hard. Earnings just absolutely changing the game. 12% on earnings right there. Absolutely insane jump from positive earnings here. We look at the chips. Micron, SanDisk, these have just been on a steady higher low that is kind of forming, bouncing off of this 200-day moving average. We saw the same thing back here, lots of consolidation, massive rally. We could potentially be seeing the exact same thing right here. Nice retracement, massive rally we could be getting. Earnings aren't until September. They've been blowing earnings out of the water every single time. One thing to be careful with Micron, though, is, these companies are getting very high priced up to where their expectations are really high. Their expectations are really high on these earnings. They come out and they miss earnings, even though earnings are better than the last earnings. If they aren't above and beyond like everyone's expecting them to be, then, these companies will fall. SanDisk for an example. SanDisk I don't know why it's not loading all the SanDisk can't come out with earnings, and they're great earnings, but they were supposed to be absolutely, or okay, this was SK Hynix. I was gonna say, where's SanDisk? There we go. SanDisk comes out with earnings. They beat earnings. They blew earnings out of the water, guys. 12%, 5% on revenue. But guess what? It wasn't as much as people expected because these companies are priced so high right now. These companies ran like 1,200%. They are priced in so high right now that even though earnings are good, they're supposed to be above and beyond. And when they're not above and beyond, good earnings is still going to make this company fall. So good earnings come out and this company still falls. You know, this company right here fell literally 13%. So, yeah, that's something to pay attention to. But again, on the grand scheme of things, these are just big retracements. These are companies that are pretty cheap right now. You know, these are stuff that are on a 50% sell right now. If you did pick this up and it got to its just last high, it'd be pretty much double your money. If you put 10 grand into this, you can make another 10 grand here. If this did make a higher low right here. And yeah, that could happen quick. So yeah, that's kind of what's going on with this. SK Hynix just got listed. This is another chip company or memory company. This is something that kind of just got listed as of recently. We gotta go into AI cloud. Nebius, for example. Nebius is on a nice retracement here. There's some support levels down here. Delete these, clear this out. Nebius, nice retracement here as well. A lot of these companies, guys, overall just on a nice retracement. Nebius has earnings this coming week on Wednesday after market close. Kind of getting a head and shoulders pattern on this 200-day moving average right here. Kind of getting a head and shoulders pattern right here where, if we can hold some support here, earnings comes out great. I think we could very easily, very quickly, because again, earnings is in a couple of days. If earnings comes out good, I think we can very quickly and easily just simply make another leg in this company. And if that is the case, that is almost a 60% return from where we're at right now. So that's kind of what I'm watching there. We look at CoreWeave. We're saying the same thing. We have some resistance levels up here at these highs. But yeah, we see the same thing on CoreWeave. CoreWeave is just kind of like Nebius. CoreWeave has been held down a lot. It has been missing earnings. But if earnings come out as a surprise, which they actually might this time, because just as more AI is getting put to use, I think that we could get a very massive spike here because, again, CoreWeave is a very highly speculated company. Even when we were missing earnings back here, we were still rallying really, really hard. We missed earnings again. We were still rallying really hard. I think if we get an earnings that beat expectations, I think CoreWeave can really, really rally hard here if we get those earnings to beat expectations. So again, those come out Tuesday after market close, and then Nebius is Wednesday after market close. So that's kind of the AI infrastructure game right there. AMD, just really consolatory. Again, this is a company that's priced in really high, but this is also a company that has a lot of room to run as well. You can see since 2020, end of 2025, just consolidating, and then we get these massive rallies, and then we just consolidate heavy. So we're kind of in those consolidation phases. It's been beating earnings greatly. Broadcom, looking like it's ready for another extension, another leg up. It's looking like it's really ripping right now. I think Marvell is set up for a very nice situation here as well. And I don't know why my lines keep changing. Here's this last high right here. I think a rally from down here is another 50% gain. So again, you invest $10,000, and Marvell rallies to that next high, you can make $5,000 profit there. on these companies that are literally set to have money spent into them. So this is setting up very nicely. Earnings is not until the end of August. Just had its earnings in June, blew them out of the water. Blew the earnings out of the water, rallied really hard, overextended, and then took a dip with the overall broader market as a whole. Took a nice dip right here. And from here, it's really looking good, like it's set up for another nice extension to kind of rally hard into next week and potentially, the rest of August. And if those earnings flow through, we can get another leg up. So a lot of these stocks, guys, are on a really nice retracement and dip right now. I'm not saying the dip is over, right? We could always have another leg down like this. And these earnings down here at the end of August could be the ones that push these companies up. But these companies are definitely on sale right now. Iron, kind of the same thing as Marvell. They're kind of doing the same thing on a dip as well. VRT, we go to the cooling, AI cooling sector. This is on a nice retracement as well. Overall, nice retracement. Again, overall, we've just been pumping, and it's just on a nice retracement. That's pretty much it. It's not as cheap as it was, right? We've had a major recovery. Again, these last 2 days of July. I mean, we've had a almost 30% recovery, but we've also still taken a dip. That's 41%, and we're still on sale about 30% right now. So that's that. We look at Bloom Energy. Bloom Energy is another one of those great companies that is it's just beautifully trending. It's on sale right now. Higher lows beautifully off this 200 EMA. You're seeing the same thing, kind of another head and shoulders pattern. You're getting kind of a left shoulders head and a right shoulders pattern. We're kind of consolidating. You're getting a head and shoulders pattern, guys, on pretty much all of these companies right now, forming these higher lows right here. And they just had their earnings. They just had their earnings down here when every single stock across the board was getting crushed. They blew earnings out of the water and never really had a rally from it, right? The broader market, had a good bounce. We never really had a major rally from it yet. And I think it's in a position where it could easily just make a simple another leg here. And from these prices where we're at right now, that would be again, 60% rally right there. NVIDIA rallying hard, going through those highs again. Again, rallied 17% from just a couple days ago. S&P 500 making new all-time highs. It was making new all-time highs, I think, at the middle of the week today. And it is now Friday, so we'll see what next week brings. Same thing we've gotten previously, though. If we really zoom out, we run hard into these EMAs and we bounce. Same thing back here, we run hard into these EMAs and we bounce. Same thing back here, run hard into these EMAs, we bounce. Run hard into EMAs, we bounce. We're seeing the same thing. We're seeing it here. Loads of consolidation. We have consolidated for about since May, really. Just sideways movement. And we're finally kind of getting that explosive type of move, where S&P 500 could really rally right now. This is not a time, in my opinion, to be investing into, if you have if you just put a set money into S&P 500, this and that, at this point in time, all-time highs is a very bad time to be doing this, guys. In my opinion, if you have an investment account set up like that, like you're putting a set amount of money into the S&P 500, this and that every month, I think if you do a little bit of studying on how this game works, I think you should just save yourself the money, because right now you're just throwing money away, and wait until we get actual retracements. And when we get retracements into the cheaper prices, load that money into it as a lump sum. That's kind of just my opinion. That's just my opinion. InnoData, previously, where I've made thousands of dollars off this play. Earnings absolutely blew it out of the water. Rallied hard and big retracement, and it's not looking bad either. More earnings came in. I think they destroyed earnings on this one as well. Yep, absolutely destroyed earnings. So Yeah, great company there as well. So that's pretty much it for the stocks. If you're wondering, if you want to know specifically what stocks I hold a couple of these. Not all of them are amazing plays in my opinion. Um, some are better than others, I should say. These are actually all pretty good plays. You just kind of have to understand what one plays a role in the AI build out right now. If you're interested in knowing what specific stocks I have, I will leave a link in the description. I also have videos there where I explain every single stock that I hold with a 30-minute long briefing explaining every single reason how this company is making money, how I think this company is set up to make money in the future. All the other hedge fund managers and big people in this game that actually hold the stock as well. Uh, there's a lot of good companies out there. So if you guys are interested in that, and you're interested into deploying some capital into this market, because there is a lot of money to be made in this AI build out, you're kind of missing out if you're not into it. I will put that link just right in my description. You guys can click on it and check it out. But that's pretty much it for this video, guys. That is the breakdown of the trades this week. I wasn't too active in the actual trading market, and this is also what stocks I've been doing this week. And yeah, we had a pretty good week across pretty much everything. So hope you guys enjoyed this. If you guys have any questions, let me know. And let me know your feedback on these types of videos. If you want me to, I might just start doing my weekly recaps as like a trading and then investing side as well. But yeah, I will see you guys on the next one. Peace.